Alright guys, welcome back to Roxham TV and also welcome back to Gem Crypto, whichever platform you're watching on. Today, Bitcoin is taking a little dump. As I'm watching the chart right now, we are heading to 100 and that's some very scary shit, I would say. But like, if you actually catch our live stream yesterday, we are doing TA and we were talking about the short time frame all the way to weekly, so from a longer time frame. So all I could say is that I wasn't too surprised to see this correction. Of course, we're gonna dive into details and also what's the latest update in terms of the Bitcoin price. There are so much FUD again on Twitter. If you go on crypto Twitter, people are saying the cycle top is already in. We have already seen the cycle top on 6th of October. Another really well discussed topic that people like to say is whether we have a proper alt season, because this cycle is so different. In prior, maybe 2021, during the NFT hype and also the GameFi hype, like literally I could just close my eyes and bet on any random altcoins and it would generate at least 10x. And I'm talking about on centralized exchanges on Binance, and you still can find gems like this even on Binance. So like, is this no longer the case? Are we still seeing alt season? We're gonna look at the chart today. Of course, we're gonna dive into on-chain to just to give you guys a little bit more comprehensive analysis where the market is heading to. Like, shall we be concerned right now? And after our on-chain analysis, of course, we always have the news analysis as well. Because like yesterday, I saw really funny news how the Fed finger and printed out $300 trillion for PYUSD. So a stable coin. We're gonna look into that and also some geopolitical news, because Bitcoin, again, like I keep on saying, why we adding geopolitical news analysis for our live stream moving forward is that Bitcoin is getting so big right now. Like big banks or BlackRock, all the institutions are piling in into the Bitcoin market cap. So it makes sense, and why is basically trading very closely alike with the S&P 500, basically with the entire US economy and also the traditional market. All right, if this sounds good to you, make sure you hit the like and also subscribe to the channel on both Roxham TV and also on Jam Crypto. Without further ado, let's hop on to the chart. So I like to start with the hourly chart. And right now we kind of, I actually drew this descending channel just 2 hours before I hop onto the live stream with you guys, and we are already breaking the support, sitting at 105k. Looks like we're heading all the way back to 102k. I mentioned 102k in our yesterday live stream. If you guys watched that, then if you were, I don't know, like waiting for an entry price, or maybe some of Degen out there or trying to short the market, then you guys consider very, very lucky. So, anyways, the reason why I was calling 102k, because like I talked about the volume yesterday. So let's go ahead and pull out our VP. Basically, like ever since we lose that level, so of 108k, it's like a free fall down, go back to 101k, and this also align with the weekly candles. Of course, we're gonna get into the weekly in a bit, but like crash like this is really scary and it's definitely no fun, and it's kind of make you question whether it's a good time to enter the market or not. Like, of course, I was like drawing this descending channel earlier. This is, of course, a bearish pattern. I spotted this pattern just like today, like hours ago before the live stream, and we are already breaking the support level, so that's not good. And not only this, and if we also zoom out to look at the slightly bigger picture. So since 126k all-time high back in 6th of October, like we are on a downtrend as well. Of course, like I didn't, okay, back back to 10th of October. Of course, I didn't predict a crash like this. This is full of market manipulation. I would say this is a black swan event. I didn't know this would happen, but like even if you zoom out to the general trend, like Bitcoin is trending downward. We are on a correction. So I wasn't surprised to see a correction after 126K, but like this severe, I would say on the short time frame is not looking entirely strong right now. Like for me to be like basically bullish again on the hourly, so I'm talking about coming hours or even the coming days, basically short time frame. So in order for me to be bullish again, like I need to see Bitcoin break out of this descending channel. Like I was surprised that we have a hourly close below this descending channel. So yeah, because I literally I draw this just 2 hours ago and we broken out of that support level already. So at least this is on the hourly. On the coming hours, I'm not like entirely bullish for Bitcoin. Let's also hop onto daily and perhaps we could like shine more light on what happened on the daily. So let's go ahead and remove all the drawings. On the daily, I'm afraid. So let me draw the, I like drawing the rectangle basically to show the support and resistance range, the level that we should eye very closely. So this is almost the mid-level, so 112K to 113K. This is a major range for support and resistance. Like the fact that Bitcoin drop below this range that was back in 14th of October, so just like 3 days ago, that's another weakness sign that Bitcoin is showing. And also, if you also look at the trend, like the downward trend since all-time high of 126K, like basically Bitcoin has no sign of like breaking out of this resistance whatsoever. Looks like it's going to continue and maybe even at a more severe rate, more rapid rate. So not the best looking on the daily chart neither. So that's at least on the shorter time frame, hourly and daily. Let's also hop onto the weekly, see if we should still maintain our bearishness. Like you could be very concerned because like I don't talk that bearish. I am more like neutral, but like from the hourly and the daily, I'm not sensing too much bullish signs. But on the weekly, so let's zoom out on a bigger picture. Like at least I noticed that we still, like technically speaking, we still haven't dropped below the 50-week moving average. So when it goes to the longer time frame, I like to use maybe Coinbase or Bitstamp instead of Binance because we just simply get more data history on Coinbase. So if different exchanges have different prices, like as you recall, Binance kind of dropped to 101K, but like for Coinbase, that's a different case. So that's good. So we're just going to stick with the Coinbase one for the longer time frame. So one thing I noticed about the weekly chart, and that's another not so bullish sign. I'll just give it to you. So one thing I saw from the hour side is that it kind of forming this bearish divergence. And this momentum has actually been built up since December 2024. So the momentum it has been building up for almost a year. And I would say like this momentum also aligns with the 4-year cycle, right? Because we are right now in Q4. You know how the saying goes, like usually Bitcoin will have a top cycle in maybe, well, I'm not as, I would say, as straight as some of the 4-year cycle believer, because they believe that we have already seen the cycle top on exactly 6th of October. Well, I do think we're going to see one, but I do think it's going to be in Q4. So this kind of, so TA kind of aligned with the 4-year cycle as well. So that's how scary the whole thing is. although I don't think we have seen a cycle top, and I'll give you my reasoning in just a bit. So we are seeing this like bearish divergence. Like it doesn't mean that we're gonna straight up go to the 50-week moving average, and from then we're gonna see like a prolonged bear market all the way back to 200-week moving average. That's not what it means. Like as you can see in this chart, like we have been building this momentum for a year already. So this thing takes time. I do think there's like more room to grow in Q4, and this is one. So the RSI is turning bearish. Basically, it could stay here for quite a while, maybe weeks or even entire month. But we're gonna come back to you. So once we get more updates, then we could confirm whether the Q4 is really the cycle top, or maybe we already seen the cycle top. We only know this in hindsight, right? All right, so that's for the RSI. And as for the bull market support band and also the 50-week moving average, let me remove the drawing. So let me close the RSI as well. So if we soon close out, we could see that the weekly candle, we dip below the bull market support band. So you see this cloud, right? Like this is the bull market support band. And obviously this candle we haven't closed yet because it's still on Friday. So it's going to close in about 2 days, 2 or 3 days. If we are actually closing below, very likely we're going to reach 50-week moving average. But okay, even if we reach 50-week moving average, it's not a confirmed sign that the bear market has started, because a weakening is fine. That's what happened back in April. So April this year, and that's what happened in 2024 September, and also in August 2024 as well. So wicking below, like just visiting the 50-week moving average is actually fine. But like if we end up seeing a weekly candle close below the 50-week moving average, so that's very, very concerning, because that's what we saw back in November 2021 when we have confirmation that, okay, that's the end of bull run. Like, okay, maybe just one candle, it will still be okay, but like 2 consecutive weekly candles close below the 50-week moving average, I'm out of here. Like, I'm sorry to break it to you guys, but like I'm not really interested in holding my bags for another at least, I don't know, 1.5 years. Like I'll still do crypto content, but like waiting around for that long, like I'll much rather to take my profit, because well, throughout crypto, throughout my crypto content journey, like it's okay to take a little bit of profit, and it's okay for you well. And usually when that happens, like Bitcoin would like to go back to the 200-week moving average, and that's when you know we are in a bear market. So yeah, I mean, I'm sticking with my strategy. There is nothing for me to be too concerned right now. Like we are still some way down to 100 101k. So until we actually get a weekly close, I'm still quite optimistic, at least on the longer run, on the higher time frame. And one thing I noticed about, because people like to talk about alt season, and actually yesterday my community was like kind of complaining why I don't talk about altcoins. And I mean, just like look at this chart. We are on Toto 3 divided by BTC. Like, what alt season you guys are talking about? Like, what the hell? Like, altcoins basically on a downtrend since November 2022. So, what you guys on about? What alt season? I mean, I I still have a lot of altcoins. I trade a lot of altcoins as well. But like, as for investment, more for long term, I don't see any financial reason for me to enter altcoins right now. Maybe we have bottom, maybe, but like, okay, Bitcoin dominance, I think we're still gonna rise because right now we are sitting like very close to 60%, so 59.9%. So I still think there's room for Bitcoin dominance to grow. The reason why I will say this is that, okay, if we believe the macro narrative, so if we believe that global liquidity is unlocking, so therefore it would be beneficial for Bitcoin, so Bitcoin going to climb higher. Well, even though that's the case, altcoins, it still takes time for altcoins to actually reap the benefit from that, reap the reward for that. Usually maybe a few weeks after Bitcoin, because we all know the gist, right? First we have the Bitcoin season, and then it's ETH season, and then it's altcoin season. Maybe there's a lag, like a month or like 2 months lag. When alt season actually happen, that's when we see the cycle top. So for those people who keep calling for alt season, they are essentially calling for cycle top. So one thing I'm betting is that Bitcoin dominance is going to rise even if the global liquidity is unlocking and Bitcoin reached new all-time high, that Bitcoin is going to rise. If, however, the 4-year cycle is being so intact, we have seen the cycle top ready, like Bitcoin dominance is going to rise as well. So regardless, for the coming days, coming weeks, Bitcoin dominance is rising. So I seriously, I don't know why people still on about alt season. I think this market is so different because the market cap is so much bigger already. Like there are seriously more than 1 million altcoins out there, more than 1 million tokens out there. So when the liquidity is not so concentrated, like you're gonna take a lot more money just to move the price of tokens. So I'll just give you one list, all-time high, because I was around for quite some time when altcoin was like so crazy. I mean, I made generous amount of money from the previous cycle, but like I still have altcoins, some selective altcoins. I will say selective altcoins would pump. Some of my friends, they will say, okay, maybe Bitcoin and then ETH and then Solana and Sui, and that's it. Then we don't see the rest of the altcoins pump. That's how bearish they are. But I'll just like give you some objectives. So this list all-time high, we are essentially ranking from 1 to 100. So basically the top 100 altcoins that we have based on the market cap. And here, like how many percentage to its all-time high. What you notice is that the top list right here, they are mainly stablecoin. So what you on about, guys? They're mainly stablecoins, and they are okay. Gold is making to the list, mainly stablecoins. Or okay, if you scroll all the way down, we see Bitcoin. So Bitcoin is 19 to 20% away from its previous all-time high. Like if you do spot, it's actually okay. Losing 20% is not fun. But how about we do the other one? Like how about we start from the worst altcoin? So look at ICP. Okay, I think ICP used to be like the top 20 altcoins from the previous cycle, if I remember the correctly. So ICP needs to pump another 23,000% in order to reach its all-time high, its previous all-time high. That's how bad the whole altcoin market is. Yet people was asking me why I don't talk about altcoins. So, I mean, yeah, just come to the real world. Just look at the list and you know. And Algorand, that is a very OG coin. It needs to pump another close to 2,000% just to reach its previous all-time high. So yeah, Polkadot, yeah, this one hurt because I was actually a big fan of Polkadot, but like right now, I don't know what's wrong with Polkadot. But anyways, that I hope answers some of the questions about alt season. One thing I I kind of look forward to is actually Solana, because Solana, we know that we have a ETF coming. Possibly we would get the confirmation from the SEC. However, as we know, the government is still on a shutdown, so that kind of delay. But like Solana, when there's like ETF approved, I do think there's some X factor for Solana. So as I mentioned, like that is like selective of altcoins would still do really well. Maybe Solana or Hyperliquid, for example. Anyways, let's hop on to the on-chain, because I prepared a lot of like on-chain data for you guys just to see where Bitcoin is heading to, because Bitcoin is a little bit indecisive right now, looking a little bit bearish. All right. The first metric that we're going to look at is the Bitcoin price forecast tool. So like this chart shows different long-term models that people use to guess where Bitcoin's price might go. It gives a sense of what is too low or what is fair value or what is too high based on past cycles. So there are different lines here. And then the first one, we have the green line. So green line at the bottom. This shows the lowest price Bitcoin has reached in past cycles. It's based on how long coins have been held and when they move. Think of it like almost like a floor for Bitcoin's price. And then we also have the orange line here. So this is the middle point between two other values. So the average price of all Bitcoin and the average price of Bitcoin when it's transferred is like the fair value during bull runs. And then, of course, we have the red line at the very top. So this is the upper limit. Like in the past cycles, whenever Bitcoin touched this line, it was close to final top before it crashed. So across history, Bitcoin's big cycle tops usually happen when the price hit the red, so the top line here, while bottom lines up with the green or orange line. So looking at today's chart, Bitcoin is still below the upper, so the red band here, so the red line. That means the market hasn't yet reached the euphoric stage we have seen before in the cycle top. So in other words, like history suggests there's still room for Bitcoin to climb. Of course, nothing is guaranteed. If Bitcoin suddenly shoots up into the red zone, that would be a warning signal that we are near peak. But for now, the data suggests that we are mid to late in the cycle again, because we are in Q4 already, so not at the very top. So this could mean two things. The cycle still has more growth left before overheating, again, because we haven't really reached the red line, like not even in 2024. So that could mean there's still more room to grow, or this cycle may play out so differently or very different from the past. Either way, the chart is a reminder that we are not in the classic low off top phase that usually marks the end of a crypto bull run or a Bitcoin bull run. All right, so this is the first metric. And second on-chain metric is of course, the short-term holder cost basis. Like we usually bring this up because I think it kind of offers a lot of perspective. And the reason why we look at short-term, so what classified as short-term is Bitcoin holders less than 155 days. That's classified as short-term. So this level is important because it often acts as a line in the sand. So in bull markets, when price is above, so this pink line is the STH cost basis. So if the price was above this pink line, it acts as a support. So buyers keep stepping in, keep pushing the price higher. In bear market instead, so this level, like this pink line, is almost acting like resistance. So that's why many traders call it a momentum indicators for Bitcoin. And what it means right now, like at this moment, like Bitcoin's price recently got rejected, rejected below this like pink line. That means bulls try to push above it, but failed. Now bears are in control of short-term momentum. So this line is currently sitting around 113K. This is the level Bitcoin must get back above to flip the trend positive again. Until then, every move outward is risky because the short-term holders could sell near the cost basis, creating more pressure on the price. So here's the bottom line. If Bitcoin flips 113K into support, momentum turns bullish again. So it's game on. If, however, if it stays below, short-term price action remains weak, the bulls are actually fighting uphill. This single line tell us a lot about whether Bitcoin has strength or whether the rally was just a false hope. All right, and then the final on-chain indicator I like to bring it to you guys is the everything Bitcoin indicator. So this is a chart that makes together many important signals into one. So instead of looking at just one metric like MVL fee or Mayer multiplier, this tool combines several, including profitability, liquidity, money supply, and investor sentiment to give a big picture view of where Bitcoin is in the cycle. When the indicator is high, it means the market is full of excitement and greed, usually close to cycle top. When it's low, that means there's fear, there's undervaluation, it's good buying time, usually near cycle bottom. So that's why it's called everything indicator, because it blends on-chain data and macro data into just one simple score that is really easy to track. And at this moment, the everything indicator is sitting at the middle range right here. So that's the orange line, that's the everything indicator. Right now we're sitting in the middle zone. It's not showing extreme greed or extreme fear. This suggests we are in a phase of neutral to slightly growing optimism, but not yet very crazy top of cycle stage yet. So the interesting thing that I noticed about this chart is that how each cycle, it gets tighter, it gets calmer. The highs aren't as extreme. You see almost diminishing return, and the lows aren't that deep. But the rhythm, I would say, stays the same, fear at the bottom, greed at the top. So right now we're somewhere in the middle, so somewhere in between. So I would say the bigger picture, short-term wise, Bitcoin looks weak because it failed to get back above the short-term holder cost basis at 113K. Until bulls flip that level into support, rallies could still be fragile, but zooming out on the long-term data is still rather positive. The price forecast tools show Bitcoin is well below the historical top bands. The everything indicator is holding near the lower end of this trend channel, showing neutral, not euphoric. That's the sentiment here. So this tells the cycle is mid to late stage, not the end. Bitcoin flushed hard, but it hasn't showed the blow off behavior we usually see before a real peak. In simple terms, we are cooling, not collapsing. If long-term indicators stay healthy and Bitcoin reclaims 113K, that's a critical level, the odds still lean towards higher prices before true cycle top arrives. So anyways, that's for the TA and also for the on-chain. Before we hop onto the new segment, we're going to take a 3-minute break. We're going to write out the ad and I'm going to see you guys very soon.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin! Come on, little buddy, Bitcoin, I need you. Don't go.
Thằng ok là ồ Alright guys, welcome back our Bitcoin folks. As I promised you guys, we're gonna get some news analysis after the data, after the TA, and also after the on-chain. So that's what you're getting. Well, look at this. So the first news that I found very interesting is that the CME actually flipped Binance. Like, this is something very unusual, I would say. Well, it's not exactly on the trading volume, but at least on open interest, so the total value of outstanding future contracts. So if you actually scroll down, you can see that basically on all the major altcoins, so BTC, ETH, Solana, XRP, CME is actually beating Binance. Well, this is I would say, a very symbolic flip, because Binance, of course, like still has the biggest trading volume, but the fact that more capital is now locked in CME contracts, it shows that institutions are moving toward regulated platforms and kind of away from unregulated one. And I would say there is a trigger for this as well, because as we know what happened last Friday, there is a major market crash, and at least $19 billion was wiped out from liquidation. And in terms of like total crypto market cap, like it lost more than $100 billion in a matter of hours. So the crash was of course triggered by US and China trade tension, but it made it so destructive because like was the structure of unregulated exchange. Platforms like Binance, they have extreme leverage on some of the coins and very risky collateral, kind of make the liquidation even worse. So kind of created like a cascading effect, stuff like that. So why CME survived much better, you could ask. CME only saw its open interest drop about like 11%, while Binance fell 22%. I would say one of the reason is that CME has much lower leverage. So they kind of limit to 2.5x with very like straight cash settle margins only. And CME, they have halting trades, so they actually close over the weekend just to avoid the worst of the chaos, because weekends the liquidity kind of thin, not much trading liquidity compared to weekdays. And for Binance, like Binance allowed synthetic stablecoins like USDE as collateral. And as you know, like USDE kind of depacked, so-called depacked, but it wasn't Athena issue, it was Binance depack. So when users of Binance use USDE as collateral, and when the collateral depacked, so it dropped from $1 because it's a stable coin, right? So it dropped from $1 to 65 cents. So a 35% decrease in the collateral. So Binance immediately kick in and liquidate a bunch of the future contracts. So Binance kind of on the blink right now, because there's so much trust issue, and then people are calling manipulation from Binance. And one thing I would say is quite interesting by spot is that despite during the market crash last week, all the coins were crashing, but BNB was actually breaking new all-time high. So that's one thing very interesting. There's definitely a flaw in Binance margin system where retail traders were being liquidated. And yeah, I mean, there's so much outrage on Twitter and people are so unhappy. They're like kind of like a boycott campaign going on right now, because like people are saying, okay, let's just go to CME and let's just ignore Binance. And it kind of like, I would say the bad reputation is piled up over the years. It's not just like a one event, like one incident kind of thing. Because like Binance, there might be a history of watch trading, insider dumping of tokens, and regulatory fines. So that everything combined from all these years, it kind of creates so much rage on Twitter towards Binance. And that's another thing I read into this, because CME, I'm not sure if you guys know CME, because like it's very TradFi stuff. So CME is mainly for banks, for hedge funds, for asset managers. So this flip shows that growing influence in crypto, the traditional world. And of course, we have the launch of Bitcoin and Ethereum ETFs earlier in 2025. That kind of funneled billions into contracts, into features from the traditional world. And CME right now, they kind of have planned to go 24/7 in 2026. That may be even more attractive. Like the final take here, like at the end of the day, I don't think Binance is going away. Like this is not the end for Binance, but it may be the end of Binance dominance over institutional crypto features, I would say. So that's one story that I find quite interesting. The second one, which is even more interesting. So news-wise, there are a lot of interesting stuff. Price action-wise, not so much. All right, so news-wise, we have another one. So PYUSD, as you know, is the PayPal stablecoin. It was launched back in 2023. It's meant to act as a digital dollar back to the US dollar at a 1-to-1 ratio, of course. So Paxos is a New York regulated blockchain company, handles minting, burning, and custody. But what happened yesterday is just, okay, PYUSD, first of all, is massive. They have a market cap of $2.6 billion, making it like the sixth largest stablecoin. So stablecoin like this, like they're huge in crypto. They move over $15 trillion a year, powering DeFi and basically all the RWA stuff. In fact, stablecoins make up like 90% of crypto liquidity. But like there's a glitch that happened yesterday. So what happened? I'll give you guys some timeline. So exactly on 15th of October, Paxos minted 300 trillion PYUSD tokens on Ethereum. So that's $300 trillion because it's, again, a stable coin. That's actually more than double the world's GDP. And the funny thing is the transaction cost is only $2.6, like $2.60 in gas fees. So that's the magic of blockchain. Like no matter how big the amount, the gas fee is like, is a fraction of what you pay in the traditional finance world. So this was over 12,000 times bigger than PYUSD normal supply of 25 million tokens. And on-chain trackers, like they saw this within minutes, like almost immediately. PYUSD like dipped a little bit, like 0.5%. It's not very severe. Aave immediately stepped in, froze that PYUSD market, and Curve also saw some slight slippage. And Paxos, like just maybe 15 minutes later, they burned that extra tokens, sending the extra tokens to a burn address and restoring supply back to 25 million. So the whole thing happened basically less than half an hour. And the Paxos team, what they explained was that they have flat finger. So a internal technical issue, not security breach, not so all the customer funds were saved. But like this is like, I would say it's very funny. Like they are a massive stablecoin supplier, and they are the sixth largest stablecoin in the whole world. And yes, they have fat finger issue. So I would say perhaps the bigger issue. So PYUSD smart contract has no cap or multi-signature approvals. Like why? I seriously, I don't understand why a stablecoin like that, and they don't even have multi-signature. So a single contract, a single address can mint unlimited tokens instantly. Experts say this was either a back-end bug or a mistake attempt to fix a prior 300 million burn. Similar errors actually happened before. That was for Tether back in 2019. They accidentally mint a 5 billion USDT. So this isn't a hack. It's just like, I would say it's extremely stupid. But again, like there are ways to fix it. Like maybe like proof of reserve checks directly in contracts or AI validation, or most importantly, having a multi-signature approval for minting. I thought that was basic, but apparently I was wrong. All right, so this also highlight the bigger issue here. Crypto is kind of like double-edged sword. Like there's weakness, like mistakes can look really ridiculous, like $300 trillion. That is more than the world's GDP. But it also has, I would say it has the beauty, because like blockchain transparency, again, this whole thing was being spotted within minutes, like almost instantly. So this is I would say the beauty of decentralized, because everyone in the world could look at the stuff on chain and spotted the issue instantly, unlike traditional finance. And for TradFi, if there's an issue, it could take like days to resolve them. All right, so that's another very interesting news. So the third interesting news I've got for you guys is Peter Schiff. Peter Schiff. All right, Peter Schiff. All right, his stance. He is a big gold guy. He loves gold, and despite Bitcoin, he just made a statement. So gold is more likely to hit $1 million than Bitcoin. I mean, we'll see about that. I mean, gold is from the all-time high. It's doing really well. Let's check out the price of gold right now. Wait, gold. All right, see. So it reached like 42. Wait, why is it not showing? So 4,200, more than 42. It's reaching like 4,300. So 43. As for Bitcoin, of course, like people are saying that Bitcoin is dipping so much. Like year to date, is actually so much less than gold, only 12%. But if you zoom out maybe to 5 years, then yeah, gold can't compare to Bitcoin return. But like, it is Peter Schiff, and we're just like taking piss out of him. All right, so that's for Peter Schiff. Let's move on to some geopolitical news. So one latest development we have here is that exactly yesterday, so 16th of October, Donald Trump spoke with Putin for 2 hours. Like he called the talk very productive, suggested a face-to-face meeting in Budapest. And this really matters because this would be Putin's first EU visit ever since the war started. It signals Donald Trump is pushing hard for basically diplomacy, but of course, like this would worry some. It could mean like concession to Russia. That's because one worry they need to save face, right? So in terms of the Budapest meeting, it's likely between 20th to 25th of October. So this month, they're going to talk about ceasefire, sanctions, Ukraine's NATO status, stuff like that. But if you ask me, like how likely this was success, I'll say the chances is pretty low. And Putin most likely, he would just like stall for more time when he's in Budapest, while Ukraine is trying to save face as well, like refuse concessions. So, of course, Donald Trump is pushing very hard for ceasefire, not only in Ukraine, but also in Gaza. There's like a ceasefire deal being signed, but like, I would say the ceasefire in Gaza is quite shaky as well. Israel killed 24 Palestinians in 5 days, and Hamas killed rivals. Hamas refused to disarm, and Donald Trump actually threatened Hamas directly. So he, in a direct way, he was like, "We have no choice but to go in and kill them." That's what Donald Trump said. So the chances of the lasting peace in Gaza, I would say, is quite low, maybe 20 to 40%. Some progress on governance, but disarm, like asking Hamas to disarm, that might be too much to ask for from them. So why Bitcoin investors should care? Because at the end of the day, this is a Bitcoin channel. So I'll say geopolitics directly affect Bitcoin. Like even for the Ukraine war, an escalation usually means a higher energy cost, more inflation, so more money flowing into gold or even USD, because people feel like it's a so-called safer asset and it's risk off, so it's bad for BTC. And market also don't like uncertainty. Like whenever there's uncertainty, people kind of like want to flop to other safer asset like gold or maybe bonds, but we'll see. But anyways, like Donald Trump is trying to play the global deal maker. He's I would say this guy is really pushing hard for peace to end wars. Though Putin may stall in Budapest, Hamas might refuse to disarm. For Bitcoin investor, like the escalation is always bullish. Escalation not so great, like because the market is too uncertain, at least for the short term. Like it's going to be bearish for the short term. The next big signals will come from Trump's Budapest meeting and his meeting with his follow up with Zelensky. So we'll keep you guys up to date with more details to come. All right, so let's move on to the next one. I kind of want to dive deeper into AI because I talk about Bitcoin miners getting into the AI play. I think that's very interesting. I do think this is going to be the trend that we are entering right now. So there's some really bullish news. So TSMC, they have the Q3 report. So TSMC is, of course, the world's biggest chip maker. They just posted a record Q3 2025 earnings. So here are the details. So TSMC stock rose about 2% in pre-market trading after the world's biggest leading-edge chip maker reported that profits surged 39% year over year in the third quarter. So that's something really good. And the CEO actually say the demand for the AI chip is doubling in 2025. And everyone, so I would say the demand is mainly driven by big tech, of course, like big Microsoft, Amazon, Google. They are all trying to build more AI data centers. But TSMC, they have a deep tie with NVIDIA, and they are kind of between US and China. So maybe the company will be used by Donald Trump as one of as the bargaining chip. So I would say there is some instability from that. Still, with 67% market share in advanced chips. So TSMC is kind of irreplaceable, at least for now. And due to the deep tie with TSMC and NVIDIA, they have like a core partnership. So the deal between these two companies is that NVIDIA will design chips, so GPUs like H100, H200, Blackwell, those are really advanced chips, and TSMC will manufacture them. So actually 80 to 90% of NVIDIA production comes from TSMC, sorry. So NVIDIA now makes up 20 to 25% of TSMC's revenue. The relationship is really critical. NVIDIA needs TSMC, those like advanced manufacturing, and TSMC depends on NVIDIA's orders. Again, the risk lie between the Taiwan's geopolitical tension and supply chain shocks, yada, yada, yada. But I would say these two companies, they are a duopoly. And if we look at the AI market, like if there are any rival come close to NVIDIA, like I'm afraid to break it to you, there is barely any. So NVIDIA control 90% of market share when it comes to GPUs in AI training and inference. The second one is AMD, though is about maybe 5% of the market share. And then next one is Intel, and fourth one is like Google and Meta. They're trying to build their own chips as well. So the bull case, I would say, NVIDIA's chips and also the whole CUDA ecosystem makes it unbeatable. For those of you who don't know what CUDA is, so basically, okay, let me zoom closer. Where's CUDA? Well, CUDA stands for Compute Unified Device Architecture. It's basically a toolkit made by NVIDIA that tells all those GPU helpers exactly what to do. So without CUDA, programmers could only use GPUs for graphics. With CUDA, they can use GPUs for basically anything. So AI, simulations, crypto, and more. And analogies are, okay, if your CPU is basically a group of ants, like CUDA is the whistle and the map to tell where the ants go, basically. So why CUDA is, I would say, NVIDIA secret sauce. Okay, NVIDIA makes amazing hardware. The chips, they are really advanced, but other companies, like look at this list, other companies like AMD, Intel, or Google and Meta, they're doing it internally. They all make really good chips. But why is NVIDIA dominating the market? I would say it's actually because of CUDA, its system. So CUDA has been around since 2006. Millions of programmers learn to use it. So tons of software, AI tools are built on CUDA. This creates lock-in. If you want to switch from NVIDIA to another company's chip, you will have to rewrite everything from scratch, and that's expensive and that's painful. It's like being deep into the Apple ecosystem, like all your apps, photos, habits are tied to iPhone, and also I'm using MacBook. So like I know there are amazing features from Android, maybe the flip phone, but like when I think of switching over to a different system, I feel scared of doing that. Maybe I'm in my comfort zone. All right, so because of AI, we're also seeing huge layoff. AI is really taking our job, and here's what happened. So here's how many layoff in 2025 alone because of AI. So over 17,000 US jobs were specifically cut due to AI. And if you scroll down, I would say the number get even more concerning. So if you look at Intel, again, is the chip maker. So they lay off 25,000 of employees, and Microsoft confirmed multiple rounds of layoffs totaling over 15,000 roles. And IBM laid off approximately 8,000 employees, primarily in HR department. So chances are, like a lot of hard skills are being replaced by AI. Right now, we kind of have to think of ways to work with AI and basically for us human to stay competitive. Like one thing I noticed is that, okay, for really repetitive jobs or very junior job, it could be replaced by AI, like even right now. But we still need that human supervision. Like we need humans to basically make sure everything is right. Or even AI right now, they're really bad at numbers or math or spotting patterns. So that's human job. That's what we could still offer some of our competitiveness. And the second area I could see is soft skills, because communicating with another human being, that's not something I'll say AI is really good at. Anyways, that's for the news segment. Before we wrap up, make sure last call to action is to follow us on Twitter. So my own Twitter is jamcrypto_, and make sure to follow Roxham TV as well. We are having constant updates about the market, about geopolitics, about, of course, Bitcoin. So make sure to give us a follow if you haven't already. Make sure to subscribe to our YouTube channels, both Jam Crypto and Roxham TV. And as always, my show is Monday to Friday, 4 a.m. Eastern Time till 5 a.m. Eastern Time. So if you guys manage to watch it live, I really appreciate it. If not, it's cool to watch the playback. Everything, again, is on the YouTube channel. So anyways, happy weekend. I'll see you guys back on Monday then. Peace.